Okay, greetings everyone. It's Michael Anastasiadis here from Bosanoff Mortgages, Mortgage Advisor, Mortgages Made Easy, coming to you live with the news from today from the Reserve Bank. They slashed really the OCR from 3% to 2.5%. So great news for those of you with mortgages, you know, great to see the Reserve Bank being bold like that and effectively tidying up their own mess, their own incompetence, because these guys created this shambles in the first place. You know, they should have cut rates back in May, June. We all knew this was, you know, the economy was terrible, but anyway, they finally reacted, and it's been a big cut today. So I'll just read some of the notes here that I've taken from their press release, because there was no press conference today. There was no monetary policy statement, so it was just a press statement. So here we are. Annual CPI inflation is expected to converge to the midpoint of the target range in the first half of next year. So that means that they reckon inflation will be around 2.5% next year, first half of next year. They're still worried about inflation, but they reckon it's reached its peak in the September 25 quarter of 3%. So they reckon it's going to be coming down from here. That's why they've done the big cut. The committee also discussed the contraction in GDP in the second quarter of 2025, which was considerably larger than expected, because they mucked that up. Then they go on and give us excuses on why they mucked it up, but basically they were in their own world back then. Anyway, the final comments here after all the blah blah blah. On Wednesday 8th of October, the committee reached consensus to reduce the OCR by 50 basis points to 2.5%. The committee remains open to further reductions in the OCR as required for inflation to settle sustainability near the 2% target midpoint. So there we are, they're open to further reductions. So read between the lines, that's scope for more cuts to the OCR. So the next OCR announcement is on the 20th of November, I believe, and then the next one after that's not until February. So what does all this mean? Well, the banks have already cut their rates, and we finally got more of a normal rate spread. So if you look at the 1 year rate, 4.49 for 1 year fixed if you've got that 20% deposit. Wasn't so long ago, about a month ago, that 1 year rate was 4.72. So that's come down a lot. The 2 year rate around 4.65, 3 years 4.85. So will the rates go lower? And I was having a look at my notes before, because I keep my little OCR announcements from over the years. Now, back in March 2022, the OCR was 1%. And when that OCR was at 1%, the 1 year rate was at 3.85, the 2 year rate 4.35, 3 years 4.89. Now that was back in 2022, pretty much the end of COVID, the end of the property prices going nuts. That's when the hike started. Just to show you that there's no real correlation between the OCR and what the bank rates are. Then later that year, so from February when the OCR was 1%, by July, the OCR was 2.5%, where we're at today, okay? And in July, the fixed rates were for 1 year, 5.19, 2 years 5.39, and 3 years 5.89. So that was the rates from the banks last time we had a 2.5 OCR. But now they're 4.49, 4.65 and 4.85 and expected to go lower. And that's the state of how bad the economy is. So I'm not getting here to say who's the blame game here. Is it the government? But this is the recession that the Reserve Bank old governor Adrian Orr, he put us in this about 2 years ago when the 1 year rate was 6.85. so we could cool our jets, he was saying, and get our spending under control. Well, we've done that. The economy's hurt. We're all feeling the pain. Unemployment's gone up. The economy's gone even worse than what the forecasters said, considerably larger than they expected. This is the Reserve Bank. So pretty much what they say is going to be redundant because they've just got it so badly hopeless wrong. So what does this mean? If you've, excuse me there, if you've got a loan that's coming up to be refixed, now's the time to be having the chat to us so we can give you that advice. If you've got a loan that's on floating, expect the new floating rate to be applied over the coming week or so because it doesn't happen overnight. We can see stress test rates go down. So that's another good news. So for those that are wanting to get a loan or coming up to get that loan, it's going to be made a little bit more easier as we see the stress test rates come down. But when these rates of 4.49 for 1 year, 4.65 for 2 years, and 4.85 for 3 years, when they drop again, we don't know. I'm picking there might be some cuts between now and the 20th of November, but they might not be much. Will we see a 1 year rate with a 3.99? Maybe, but let's wait and see. And like always, you guys will be the first to know. Anyway, I'm going to sign off. Hopefully that was useful. And I'll come tomorrow with the usual weekly, I'll come again live tomorrow with the usual weekly mortgage and interest rate update. So if there's any changes, I'll bring you up to speed then. In the meantime, God bless, take care, and we'll be in touch with another video tomorrow. Cheers, guys.